As you can see, my portfolio gained 1.4 million crowns in a single day, making this one of the largest daily gains my private portfolio has ever seen. My public portfolio is doing just as well, gaining over $40,000 in a single day. Since the beginning of the year, my portfolio is now in the black, and I expect to see a return of between 15 to 20% by the end of the year. An agreement to end the war in Iran has been reached. Let's see what this means for our money and the stock markets. Of course, Donald Trump has sold the start of these negotiations to end the war as an absolute victory. But if you want to be even a little bit of a rational investor, you have to look at things from different angles. And that's what we'll do today. We'll also go over 5 clear points on how to invest profitably in 2026 if you want to make some money this year. Before we go any further, I'll tell you that I definitely don't expect a sharp rally like the one we saw last April in response to the end of the trade war. I'll explain why. Even though it seems at first glance that everything has been resolved, there is still some uncertainty. Donald Trump doesn't decide alone. It's not a unilateral decision, whether to keep tariffs or not. They have to reach an agreement. There will certainly be a lot of speculation. Oil is still hovering around or even above $90. There will still be inflationary pressures at this level. Personally, to feel more optimistic and say that this will provide relief for the stock markets, I'd need oil to be at least below $80. We don't have that. As a manager of over 300 million in capital, I have to think far ahead these days. And ideally, not get swept up in the media noise. Because there's plenty of information everywhere, but it depends on your ability to filter it and make the right decisions based on that information. K-Mark-of-Fred M2UL, and go educate yourselves on my new highlights channel, where there are short videos in which I always break down one fundamental issue regarding how to invest. I've been getting great feedback on it in the comments below the videos. And now we can ask, Andro, how is it possible that many stocks and indices are almost back where they were before the war, when the war isn't even definitively over yet? The answer is simple. Markets aren't just interested in what's happening today. They aren't just interested in today's headlines or today's oil price. Markets price in the future. They don't just look at what's happening now, they look at what's likely to happen in 3, 6, or 9 months. And that is precisely why they are so volatile. All it takes is one piece of news, one comment, one hint of change. And the market immediately reevaluates the entire future scenario. If you want the markets to make sense to you, you have to look ahead. But no one knows the future. Not me, not you, not even the big funds. We can only work with probabilities and model scenarios. That's why the best time to buy is often when the situation looks its worst. When the headlines are the scariest and most people feel it will go even lower. That's the moment to buy. Conversely, the worst time is often when everything looks safe and optimistic. The problem is that this is easy to say but hard to do. When the situation is really bad, most people don't want to buy. They want to wait for certainty. But by the time that certainty arrives, much of the movement is already gone. And those people have missed the boat again. And that is precisely why market movements are one of the most important signals for me. So, investors, how to invest in 2026 once the war in Iran is behind us, which will likely be within a few weeks. Before I dive into that, XTB, my investment broker and video partner, is still giving away a free share with new registrations. Just enter the referral code OK in the field during registration, sign up, make your first stock purchase, and you'll get a free share. So you're in the black right from your first purchase. You'll find a link for more info in the video description. Google Doc. Now I'm going to show you a very important chart. This is the money supply chart, showing how much money is out there. Notice that there's more and more of it. That means we have inflation here, and the prices of goods and services are going up, which of course includes stocks, because stocks are companies. And companies sell services, and since there's more money, they sell more. They have higher profits, and when they have higher profits, stock prices rise. Voila, capitalism. We get richer. Cash, fiat, basically, paper money, is losing value, because there's more and more of it. That's why it's necessary to own assets that grow in value as the money supply increases. And those are stocks, real estate, commodities, cryptocurrencies, etc. as a whole. I also wanted to share with you the answer to the question of whether stocks or gold are a better investment. One of our clients, whose money we manage at Liberon, asked me this. When we look at both charts, we see that in the long term, you've made money on both, though more on stocks. But, to put it simply, the question isn't whether gold or stocks are better. The question is what you expect from that investment. If you want to build wealth over the long term, historically, stocks win out. Why? Because stocks are backed by companies that make money, grow, increase profits, and often pay dividends. Gold, on the other hand, produces nothing, generates no cash flow, and doesn't work on its own. On the other hand, gold has one strong role. It acts as a store of value and a safety net in times of uncertainty. So my conclusion is simple. If you want to get rich, build your portfolio primarily on stocks. If you want greater peace of mind and protection for part of your assets during crises, it makes sense to hold a smaller portion in gold. Not as a main strategy, but as a supplement. Personally, I don't own any gold, because cryptocurrencies serve the same purpose for me, and on top of that, I don't have to carry gold bars in my backpack. However, as I mentioned earlier this year, I've limited my investments in ETFs as part of the OK Academy. I've made additional purchases for the Million Challenge, And as you can see, ETFs make up 15% of our portfolio. The rest is stock picking. I don't think ETFs will offer an attractive return over the next few years, which for me is at least 15%, so I'm sticking with individual stocks. Asoxy spews the BTR weird week. Mobile CSG, a cautionary tale. What happens when you invest based on newspaper headlines and don't know what you're doing? In any case, uninformed investors made the rich even richer, and Mr. Sternad had a nice partial exit. A good move for him. Worse for the investors. If you don't want to end up like most investors in the Czech Republic, who are either stuck in underperforming, expensive products like funds recommended by advisors, or who invest on their own but throw money in haphazardly, join us at OK Academy. We'll help you quickly stop making costly investment mistakes, get your portfolio in order, and establish a clear system for 2026. You don't have to spend hours every day searching for what's important. We filter it for you. You'll cut years of trial and error and avoid unnecessary mistakes. OK, Academy equals a system for investors who don't want to waste years on chaos, costly mistakes, and an unclear portfolio. It's not about having more information. It's about having a better decision-making system. That is exactly the role of OK Academy. You'll find the link below the video. And don't forget, the more you convert your money into assets, the less you'll have to work. Check out this video for more on that.